In part 7, we will be discussing in detail the difference between the base rate and MCLR system and how MCLR system is better than the base rate system. Now let us find out the difference between the base rate and MCLR system. Base rate was introduced in 2010 and MCLR was introduced in 2016. Base rate comprised of cost of borrowed fund, negative carry on CRR, unallocable overhead cost, and average return on net worth, while MCLR comprised of marginal cost of fund, negative carry on CRR, operating cost, and tenure premium. As far as operating cost is concerned, it is unallocable cost in base rate system and it is allocable cost in MCLR. Reference rate is not well defined under the base rate system. It could be based on marginal or weighted average or blended cost. But in MCLR, marginal cost is strictly defined as a reference rate. There is one base rate for each bank in base rate system, but in MCLR, there should be at least 5 MCLR rates for each bank at a given point of time. Any benchmark could be used in base rate system, but in MCLR, only tenure linked benchmark should be used. There is no discretion allowed on the benchmark in MCLR system. One benchmark rate in base rate system, but in MCLR there are 5 benchmark rates on the basis of tenure of overnight, 1 month, 3 months, 6 months, 12 months. Review of rates are concerned. Base rate, there is a provision of the quarterly review of rates, but in MCLR, there is a monthly review of rates. Reset period indication in the contract. There is no indication of reset period in base rate system, but in MCLR, the maximum of 1 year reset period for floating rate loan is mentioned. Under the MCLR system, fixed rate loan over 3-year tenure are exempted from MCLR. But in a base rate system, fixed rate loan should not be below base rate. On the basis of calculation of lending rate on loans and other components, it was cost of fund, margin, operating expenses, and cash reserve ratio, which together comprise base rate. While marginal cost of fund, tenure premium, operating expense, and cash reserve ratio together decide MCLR rate. Here we can see that operating expense and cash reserve ratio are common for both base rate system and MCLR system. What makes MCLR different from base rate are marginal cost of fund and tenure premium. Under MCLR system, banks are required to determine their benchmark lending rate linked to their marginal cost, which is highly influenced by the change in the repo rate by RBI. Whereas in the base rate system, banks had discretion to choose between average cost, marginal cost, and blended cost of fund. Therefore, policy transmission in base rate system could not become very effective as bank adopted various methods in calculating their cost of fund. While in MCLR, there are 5 MCLR rates on the basis of tenure of overnight, 1 month, 3 months, 6 months, and 12 months. It is mandatory for all the banks to review and publish all 5 MCLR rates on monthly basis. But in the base rate system, there was only single rate. Base rate system is also criticized for giving undue advantages to its prime customer by lending them at the rate below the minimum interest rate. Suppose the base rate is 6%, banks would be lending to prime customer at 6% or below. On the other hand, the ordinary customers were given loan at the rate of 10 to 12%. But in MCLR system, banks cannot offer interest rate below the minimum rate calculated on the basis of marginal cost of fund. Along with that, MCLR system, we can see that the MCLR rate is seen to be lower by 5 to 50 basis points for all the borrowers. Why? Because MCLR is closely linked to repo rate. Thus, there is a better transmission of RBI rate cut to all the borrowers. Whereas, since the base rate was bank's internal policy, so even after the rate cut, banks took lot of time to lower the lending rates and pass the benefit of rate cut to the borrowers. This caused huge monetary loss. If you have any question on this presentation, please put your question in the comment section and like and subscribe my channel to get further notification. Thank you so much.